Good afternoon, everybody. Welcome, welcome. Hopefully you all had a great trading morning today. Plenty of movement in the afternoon. The morning session was, I don't remember a time that I've seen the morning session be that slow. It was an absolute sleeper today. That said, before we jump into all the charts and all that fun stuff, obviously FOMC around the corner, probably why everything is so slow, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. And along with that, in the newsletter itself, we talk about a bunch of stuff that we don't talk about in this analysis. And that's going to be everything from stocks, crypto, options, anything of interest. It has been completely revamped, so make sure to sign up for that so you don't miss any of the new stuff or just miss anything in general. Along with that, the live trading subscription and trial info, that's where you can sign up for a free 3-day trial in the room. You can hang out with us for a couple days, see how we approach the markets, see how we trade the markets, and generally just get a feel for how everything works, ask some questions, have some fun with us, and hang out for a couple days. A great way to kind of get your feet a little bit wet. Now, taking a look at the news for tomorrow. The news for tomorrow, we do have a lot on the news calendar, but a lot of it is for the Euro side of things, not so much for the US. Tomorrow morning at 4:30 out of the UK, we have the retail sales month-over-month for May forecasted 0.5%. Afterward, at 7:45 out of the Eurozone, that's where this block comes in here, we have the deposit facility rate forecasted at negative 0.4%, the ECB marginal lending facility forecasted at 0.25%, and the ECB interest rate decision forecasted at flat 0%. It's the same as previous. So a lot of big news coming out of the Euro side of things. If you are a Euro trader or generally maybe you just like trading the European markets, it's definitely something to keep your eyes on tomorrow because it could get a little bit crazy depending on how how all that comes out. At 8:30 out of the U.S., we have the core retail sales for May forecasted at 0.5%, and we also have the retail sales for May forecasted at 0.4%. At 8:30 out of the Eurozone, once again, we have ECB press conference going on, and then tentatively out of Japan later on that evening, we have the monetary policy statements. So a lot of news going on tomorrow. Not a whole lot for the U.S. session. Most of the big stuff for the U.S. is at 8:30. Everything else is pretty much Euro in the U.K. We'll take it. You know, after today, I mean, I'll take anything after today. Today was an absolute snooze fest. It was brutal today. But, of course, everybody's waiting for FOMC. That could definitely have an impact. So, first of all, let's jump on over to the Euro. Take a look at what's going on over there. The Euro did put in a new trap low below the bottom. They tried attempting those lows and failed. We talked about that yesterday on how that miss on the lows is a pretty big clue because not only are they failing the breakdown, but they're also not breaking down to a new low. And we were talking about yesterday how that creates a low probability scenario that the buyers will be coming in here looking for a big move up. The difference is when you're talking about a low probability scenario, that means that the buyers who are taking that type of trade, they're not looking for a 1-to-1 or lower. They're looking for a big move, right? They need to compensate themselves for the low probability with something, and that something is, well, return on their investment or ROI. So far, the buyers have been doing pretty well. They trapped the low, they didn't break down the low, they defended those successfully, and now the market is popping higher. Really nice bullishness, creating a new level of support at 17,495. And now that we have a little bit more info, that low probability scenario yesterday is beginning to convert over into a higher probability scenario as time goes on and as the market continues to move. Now, of course, with FOMC around the corner, probabilities kind of go out the window from, 15 minutes before and 15 minutes after. But for right now, everything is looking pretty good for the buyers, and it wouldn't be a surprise to see the FOMC news spike it up towards that 18,265. And then from there, they can do whatever they want, because this is the primary objective for buyers right now who've been buying down at these lows. And again, talking about risk-reward, just a quick little lesson on risk-reward and probability, we have buyers who are buying at those lows, right? They're looking for the reversal up. Where's their stop? Their stop is at the bottom. Maybe underneath it by a little bit, but again, because it's low probability, they need to compensate themselves with ROI, and that means that their target is up here. Now look at the risk reward on this, right? We're talking 2-to-1 and plus a little bit, right? Pretty good looking trade for the buyers if it does continue that spike up. That 18,265 area is a big area of interest for me because it is a mid-peak trapping zone, and as long as they don't break above that 18,520, that could be a strong reversal spike where we pop up, we hit that, don't know what happened there. We hit that area and then turn all the way back down. That could feasibly be something that occurs. So we need to be prepared for both sides of things. The buyers might take this and rocket ship it up to record highs in the next month or two. You know, you never know with the markets. But the idea that we're looking for here is that the buyers who were initially looking for a low probability scenario, they're succeeding. And when a low probability scenario succeeds, it usually comes with two legs. This is only one. Expecting a secondary leg up would make sense right now in the euro. Looking good, but after FOMC, I'm looking for that spike up to 18,265. See if you can find some resistance there to maybe play off of. Over on gold, we have a breach of the lows of the range. Beautiful range low dip by in the overnight session for a rally back up again, and we are now seeing a push into resistance. Now, not only did this earlier one work here, that was back there, but now we have another swing low buy that trapped the bottom and popped up. I mean, they're all working. This is the beautiful thing about a range. The probability goes through the roof as long as you're willing to take a little bit of excess risk, because you never know how far the breakout's going to go. And that seems to be the case still. Gold is still chopping around. We're just not getting anywhere. It's driving me nuts. But that said, it is offering up some pretty nice tradable opportunities at the very least. The wedge low on the bottom looks like it probably has widened out at this point, so we'll give that the benefit of the doubt. Aside from that, the wedge highs may be coming across here. You know, I think really we'll wait until the FOMC comes out before we start really nailing down some form of analysis. Because given all the pent-up energy that gold must have right now with how range-bound and consolidated it's been, it would not be a surprise to see it go absolutely bonkers on FOMC. And again, we have our game plan laid out. We have support below at 1294. We have resistance above at 1310.1. And right now we are smack in the middle, so I'm not looking to do anything on gold until we can get a push into one of those areas. If the FOMC announcement does cause gold to spike downward, we do have another level of support at 1285.2 that we can work with as well. So we have plenty of things to work with, it's just a matter of which one the market wants to kind of stick with. Right now, cycling off a minor resistance at 2.4 ahead of the FOMC. Got about 50 minutes rather until that hits. So not really a whole lot going on gold at the moment. On crude oil, we did have the inventories come out. Crude oil, compared to the API report, was a huge surprise. It came out at a negative 4 million. They were forecasting a positive 1.4, completely wrong. I'm sorry, no, the API was forecasting a build. The forecast for today was negative 1.4, and it came out at a negative 4.7, hugely bullish. And I think this is honestly what we needed to see. We've been talking about the past couple days, that 66.31 level, right there, that orange level, and how we really need to see the buyers break above that and then look for the pullback and continuation move. And we just could not get above it. Every time it tried, it failed. Tried, failed. Sellers tried, they failed as well. So that's a good clue that the buyers are taking over, but it just wasn't finishing the job, and we were saying how the inventories might be the catalyst to get that job done, and that does look like the case at the moment. So now that the inventories have come out, we have a big bull spike to the upside, put in almost a test of resistance at 66.90 and missed it by just a little bit. What did it miss it by? It went up to 89, so it missed it by 1 penny. Close enough in the realm of trading. Good enough. We have a resistance level at 66.90, pushing back a little bit. Makes sense. Beautiful rally to the upside on the inventories on a surprise build. It's definitely bullish, causing the market to go flying higher. And now we have our break so far of 66.31. Now I do say so far because, well, if you look down in the bottom right corner here, we have 47 minutes left until we can really close out this candle. So if it can close strong and keep this strength going, we have a good chance at a pullback buy a little bit later on at 66.31. The purple levels that you see here are the levels that we talked about on Twitter a couple times. Those are the inventory report support and resistance levels. They worked beautifully in the overnight session going into today. Don't think we could have asked for much more there. But now, well, really, we don't have enough consistency to add any new levels to support or resistance, so we're still just kind of stuck with the same thing. We just need a little bit more information, and that little bit more information comes in about 46 minutes and 40 seconds when this candle closes to prove or disprove whether or not the buyers have the staying power to stay up at these highs. For right now, just kind of waiting to see what this candle wants to do. If it can't close above it, then we're looking to buy that pullback on the next dip because there will be an opportunity around that 66.31 retest. And then we have the S&P. Now, just as a side note, aside from the S&P and the Dow being very range-bound and sideways, which isn't much of a surprise considering we have FOMC coming right around the corner, NASDAQ did push into record highs once again. We actually had a video talking about how to find targets when you're at all-time highs because you don't have market structure to work with. So make sure to check out that video when you get a chance. But we are at all-time highs on the NASDAQ, and the NASDAQ is rallying higher, and it's very strong, especially when you compare it to its counterparts, the S&P and the Dow. The S&P and the Dow, and probably the NASDAQ a little bit, are likely waiting for the FOMC news announcement because right now it is abysmal. The S&P is just terrible in terms of price action. They tried to break above the highs. It failed. We now have a retest, and that also failed. We are looking for continuation to the downside in the grand scheme of things, but FOMC can kind of throw those things around a little bit. We do have support underneath us at 78.5. Actually, that's going to be a little bit farther up now. That's going to be at 80.5 now. So we have support below us at 80.5. Chances are when the FOMC comes out, it's going to break through some of these levels of support or resistance, so not really caring too much about this one, but I am paying attention to 28.06 on the highs, and I'm paying attention to 27.59 3/4 and the subsequent levels underneath that as levels of support if the market does catch a little bit of a dip lower. All in all, you know, relatively low volume, well, volume's actually not that bad, more so low volatility, and I think that's just because everybody's waiting for the FOMC. Once that comes out, we'll probably see the doors open up a little bit more going into tomorrow. I'm certainly hoping for that. I would love to see a little bit more volatility in the market, but we'll wait until after the FOMC to really put a nail in that one. Overall, everything is looking really good on the future side of things, so we'll head on over to the stock side of things. Didn't have any issues with Thinkorswim today, so that is a good thing. No charting issues like we had before. So let me pull this up over here, get this on a daily. Ooh, come on now. 1 day, there we go. And here we go with these indicators again. Let's get rid of the studies here. There we go. Nice blank chart to work with. Perfect. So looking on the daily chart, of course, our favorite heavy hitters, Twitter, is catching some nice rallying to the upside. It is pulling back a little bit. It did fill the gap earlier today. That was at 43.50, bounced right back off of that. And, I mean, the one thing that stands out to me on Twitter is how much open space we have going on right now. The rallying to the upside is very aggressive. It's up, you know, almost 100% from where we were talking about it initially back down at 26.60. And now, well, we have a little bit more continuation keeping it going, and notice what it's doing, right? It keeps gapping and running, and it's leaving behind this open objectives that the market is going to have to fill in at some point. Markets do not like having these open spaces when they're only traded on one exchange. Now, I say that because sometimes you'll find a stock or whatever that has a bunch of gaps all over the place. That generally means that it's traded elsewhere as well. So take some of the Brazilian ETFs. Those have been pretty popular lately. Those are traded, obviously, in Brazil along with the U.S., so they have a lot of gaps all over the place. That's not the kind of gap I'm talking about. I'm talking about a normal gap on a market that only trades on one place, right? And that would be Twitter. And we have a situation where, well, we've got a lot of gapping going on, and we have a lot of open areas of interest, and that means that this is unfinished business. The market will eventually want to pull back and get those, and those become zones of pretty big interest if you ask me. I would like to see those fill in. We're talking a that right there and that right there. So if you put some price levels on there, we have a low and a high and a low and a high. There we go. So we have a level of support below us between 42.41 down to 41.69, and below that at 38.64 down to 37.98. We have had barely any pullback at all, so pretty much any pullback is getting bought up aggressively on Twitter, and I can't say that I blame anybody for doing so. This thing's a rocket ship right now. So that's kind of the idea. If it pulls back and starts filling in some of these objectives, you better believe that buyers are going to be waiting in line to queue up and grab some more shares on those dips. Definitely paying attention to Twitter going into the upcoming days. Any pullback, really. I mean, even today, if today closes bearish, they're going to be buyers right at the close of the day. It's expecting tomorrow to be a bull day back up again. That's how aggressive we're talking about here on Twitter. Now, a couple other ones that are kind of in the same genre in terms of movement. Roku is another one that has a lot of potential going on for right now. Roku is in a situation where we kind of gapped away and ran, and these are areas that I really like to keep an eye on for potential gap fills. Right now, Roku has a gap fill all the way up at 51.1, and here again, just like on Twitter, not as strong as Twitter, but we have a bull trend to the upside that is showing a lot of strength. So really what I'm looking for here on Roku, continuation. I want to see the buyers keep this move going, keep pushing it up, and look to fill in that objective up at 51.1. Now, an intermediary objective is the high after that gap down, which is not very far away anymore, and that's at 44.33. And generally speaking, a lot of times what you'll see in those types of areas after you have a gap and run, it'll come back to there and it'll pause for a little while. You might not even see it depending on how strong of a daily candle ends up forming, but it'll pause there for a little while and then try to break through that. So the upside objective is still looking at 51.1. Kind of a side note, does sort of look like a cup and handle, doesn't it? We have a cup right here, and we could be looking for the handle off of that retest of 44.33, and then looking for that continuation up to 51.1. We'll have to wait and see. But there is definitely a rounded bottom at the very least trying to push the market back up, and I think a very obvious upside objective would be that gap fill at 51.1, so that's what I'm watching here on Roku. And then while I'm going through these, feel free to type in any markets you want me to take a look at. I will cover those for you. I had a request to talk about Amazon, AMZN. Now, Amazon, I mean, there's a couple reasons why people are interested in Amazon. First of all, 1,700. It did break above 1,700 a couple days ago. We're now back above 1,700 again. That's a big deal, right? Any of those big round numbers, 1,700, 1,800, especially when we start pushing into 2,000, which at this rate it probably will do, buyers are definitely going to be paying attention. There is a lot of unfinished business here as well. You know, Amazon left behind a big unfilled gap back in the 1,500s, back in the 1,400s. There's a lot that a pullback would definitely help on, but right now it's massively bullish. I think the big thing that we really want to see here is what happens when it hits the high. Does it stick the landing and really stay up there and start breaking above, or does it fail, and that could be the spark for a potential correction all the way back down? It is looking really good. I mean, it's hard not to like Amazon with the amount of bullishness. I know I use Amazon practically on the daily, and I'm sure a lot of you do as well. And, well, I think that definitely reflects in their bottom line. Obviously, I'm not enough to make a dent in their bottom line, but, well, when you couple up a couple billion people, that definitely makes a difference. Pretty bullish. So, with the bulls in play on Amazon, I definitely think any deep correction, and deep at this point, given how aggressively bullish it is, deep can be considered 10% off the highs. It wouldn't take much to get buyers interested in Amazon. Keep in mind, 10% off the highs is 171 points, right? That's $171 off the highs right now. That's quite a bit, and I don't think a lot of people would like to see that, but that will definitely get a lot of longer-term investors interested in starting to build. So, I mean, it's bullish right now. I'm more on a play-by-play type of situation when it comes to Amazon. I would rather look to buy it, hold it for a couple days, exit. Buy it, hold it for a couple days, exit. Because right now we're teetering on that point of pulling back. And while that pullback is really what I'm waiting for to begin really getting emphasis on it. At this point in time, though, it's basically at all-time highs, close enough. It gets a little bit more difficult to want to get too aggressive up here. Looking good, though. I mean, it's definitely looking good. This thing's just... if you wanted to look at a parabolic market, that would be it right there. When it broke above that 300 mark, man alive, it just did not stop. Kind of looks like Bitcoin on the rally higher, which might make some of you a little bit nervous because, well, Bitcoin's down 60%, so it might be a little bit of a pullback. Honestly, I think Amazon might go the way of Apple. I don't know when or if there's been any announcements on it, but Apple, it was a couple of years ago now, split, and that drove the price back down to like the hundreds or so. I mean, a 10-to-1 split on Amazon, that would be amazing, first of all. But I think that might be the next route to go if they want to try to get the share price down a little bit. I don't think many people really care, though. The volatility is certainly there, and the chart is definitely there. So, again, feel free to type in any markets you want me to take a look at for you, and then we will go from there. But for the most part, I think pretty much calm, quiet, collected, not a whole lot going on here ahead of the FOMC announcements. A lot of people probably waiting for those. Can't say that I blame them. Let me shift this back over to a 1-minute charts. Probably shouldn't have done that on Amazon, but whatever. We'll go into the study. Let me load up my default here. There we go. Just put in a really low volatility stock so that it doesn't go so insane on me here. There we go. All right, so give everyone a couple minutes here. Type in any markets you want me to take a look at for you, and then we will cover it from there. If you don't have anything, that's not a problem either. The big one that I got was Amazon. Got that one covered. Seeing some movement on Mac. Do you ever look at intraday charts? Definitely. That's pretty much all I do throughout the day. So when I'm looking at something like Mac, Mac is one of those situations that's just popping up on the radar and blowing out aggressively. On a 1 minute chart, as an example, obviously something happened here. Now, I don't know, I'm not super familiar with Merrimack. I don't know a whole lot about them, but when I see something like that, I start thinking, okay, you know, something is going on. There's news, or, you know, just something's happening, as if that wasn't obvious enough. So, obvious place, finance.yahoo.com or Seeking Alpha, which is my preferred. And we'll just look it up really quick, see what's going on. Mac. Merrimack Pharmaceuticals SEC filing, that was on Tuesday, May 8. So nothing there. Let's check out finance@yahoo.com. Mac. Earnings report, that was 6 days ago. Yeah, I'm not seeing any news or anything. The fact that I'm not seeing any news right now means that you'll probably see news soon. Usually that news that causes these bumps up, you usually find out you'll find out a little bit later that something happened. But the fact that I'm not seeing any news right now, it always makes me a little bit concerned. I see this giant spike up, but then there's no news. What's the catalyst, right? That could just be a pre-pump and, well, a subsequent dump afterward. Not a big fan of juggling knives, so I don't know. It looks all right, but it's definitely a little bit of concern that I'm not seeing any news coming across the wires at this point in time. Wonder if Financial Juice has anything. Check over here. My laptop that I use for news. Pretty much exclusively. May 29. Yeah, I'm not seeing any news. So it's a little bit of a concern, the fact that we're not seeing any news at all. And it's still going flying higher, so just be careful. Just be careful. That is all I'm seeing, though. So that will do it for today. As always, you know, FOMC right around the corner. Be very careful going into the 1400 hour. Whenever you're dealing with FOMC, it tends to be a little bit messy. So you just got to be really, really careful. The anticipation for crude oil is continuation of bullishness into the overnight session. The Euro, Gold, and the S&P and the rest of the indexes mostly just waiting for the FOMC announcement, and then we'll go from there. So, aside from that, underneath the video, make sure to click on subscribe. Click on... Just saw a chat message, Mac is whack. Underneath the video, click on subscribe. To the right of that, click on the subscribing, the notification bell icon, so you're notified every time we go live. We go live Monday through Thursday, 1 p.m. Eastern Time. We cover all the different markets that you saw today. That will do it for today. As always, if you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. And like we always say, it doesn't matter what market you're trading. Make sure to always, always make a plan, trade the plan, follow those rules. You'll be okay. Until the next time, we will talk to you all later. Have a good one. Bye.